looking at the companies that are growing faster than the market.
The whole market may be on a bull run this summer, but one sector is soaring above the rest.
Aerospace and defense stocks will be in the lead. View them as a supercharged way to play the market.
50-year Wall Street legend and data analyst Marc Chaikin shares a list of 3 defense stocks that are set to have a huge summer of gains.
This is a company most people have barely heard of and certainly not focusing on, but it's a stock that needs to be on everybody's radar.
Could these stocks help you outperform the already booming market this summer? Let's dive in. All right, Marc, so great to have you back on the channel, especially for a June that's really turning out to be quite bullish. The market had a really good May, and it seems June is off to the same start.
Well, Bridget, it's nice to be here, and you really raised the key point here. May was up 6.1% after 3 down months. That's a pattern which over the last 50 years has suggested much higher prices ahead in the short term, but also 6 to 12 months out. So the bullishness that we talked about roughly a month ago on this show has been reinforced by the strength that we saw in May.
And there's some sectors that are even more bullish than others. And one of the key ones is defense. We're seeing such a bullish trend for the whole defense sector. What's kind of behind some of this that we're seeing in the market?
Well, as the market has picked up steam here, the industrial sector, where aerospace and defense is a key part, has turned bullish in our work. And the aerospace and defense ETF, the XAR, has also turned bullish. It actually was bullish when we talked a month ago, but now the whole industrial sector is bullish, and people are focusing on these cyclical sectors because I think the focus has changed from stagflation to, okay, here's a market that has looked beyond tariff tantrums, and people are looking for opportunities.
And there seems to be quite a few of those opportunities coming from the defense sector right now. I know you have a list of 3 defense and aerospace stocks to share with our viewers today, plus a bonus stock that every retail investor should have on their watch list this summer. All of these names coming from your unique power gauge system. Marc is a 50-year Wall Street veteran who is known for analyzing market trends and highlighting the most bullish stocks and areas of the market. You can scan the QR code now or click the link we have in the description of this video to get full access to his power gauge report and much more. Marc, we're so thankful you're sharing some of these top stocks of this month's power gauge with our viewers today. So let's dive right into your list of 3 defense stocks that are really bullish right now and are showing strong growth ahead this summer.
So the first one on my list is Axon, symbol AXON. And this is a company most people have barely heard of and certainly not focusing on. But Axon is using new technology to help law enforcement and the military use cutting-edge AI-type tools to do a better job. So it's a stock that's been very strong. I'd like to see a pullback so I can comfortably buy it, but it's been making new 52-week highs, which is pretty impressive in this market.
Yeah, it's interesting that it's more of like an internal defense. It's not necessarily a worldwide warfare company. It's more of defense at home. Is it one of several stocks we're seeing kind of in that sector, seeing some bullish trends right now?
Exactly. And the second stock that we're looking at is a very well-known name, Boeing. And if you'll remember back in March and April, when we were having the sort of contentious conversations with our allies, everybody thought that Boeing was off the charts, if you will, because people are going to start buying their planes from France and England. Fact is, Boeing's doing just fine, and the orders continue to come in, and Boeing stock is rated a buy in our power gauge rating. Bullish across the board. All the 20 factors we're looking at are lighting up bullish right now.
Boeing's an interesting one because it's kind of still trying to overcome some bad news the company had about a year or so ago. Have we seen a full recovery yet?
We have. I mean, what you're talking about were quality control issues that plagued some of their suppliers and some of the equipment that goes into a big jet plane. But Look, I'm not an expert on aerospace, but the power gauge is. And the bottom line is because the power gauge includes analyst opinions and earnings estimate upgrades and downgrades, the analysts on Boeing are clearly bullish. And that's what the power gauge picks up on, in addition to the fact that the whole industry group is bullish, that there are more bullish rated stocks in aerospace and defense than there are bearish rated stocks.
Yeah, that's why this sector showing so strong right now. Let's get to that third company in this sector that's also doing really well right now.
Well, third company, and then I've got a little surprise, stock with a bullish rating that we're not recommending, but people should be closely watching. So our third company in the aerospace and defense industry with a bullish rating is RTX, formerly Raytheon. The symbol is now RTX, and they make the missiles that sadly lob back and forth between warring countries, but it's good for business. They also have some technology for commercial aircraft as well. But Raytheon, or the old Raytheon now, RTX, looks fabulous in the power gauge rating. And again, these are all stocks that are making new highs. So wouldn't run out and buy them here, but we're going to see pullbacks if tariff talks get sticky again. And these are the stocks you want to buy on pullbacks.
Very interesting pick. Again, a sign of warfare, good for business, is not necessarily a good thing, but it is a sign of the defense spending increases happening across the country right now, playing into the future of these stocks. Is that part of the reason we're seeing such bullish indicators in this sector right now?
Exactly, and we've moved beyond, at least for now, the tariff concerns, and we're actually looking at the companies that are growing faster than the market, and that's why they're rated buys in the Chaikin Power Gauge system.
Well, let's get to that surprise pick. I'm excited to hear which other stock you have for our viewers to watch today.
Okay, now this is a bullish rated stock that we're not recommending, but you need to take a look at it. It's called Archer Aviation. The symbol is ARCH. And Archer Aviation makes air taxis, cars that fly and move people around. And President Trump has said that he wants to encourage development in the air taxi industry. So Archer has been super strong lately. They don't have any revenue, and they've got a $6 billion market cap, but it's a stock that needs to be on everybody's radar screen.
Yeah, we've talked about that one on this channel a few times, along with Joby Aviation, one of the strong competitors.
Right.
And there's been so much interest from retail investors in getting in early on this. But like you said, the payoff isn't quite there yet. Do you think that the payoff and maybe the jump in the stock price could be coming sooner than later for companies like Archer?
Well, I think in terms of cutting edge technology like this, one has to assume later rather than sooner. And if the stock didn't have a bullish power gauge rating, I wouldn't even be looking at it here. But it does have a bullish rating, which means that the analysts like the stock and the stock trend is up. So we're going to be watching it. It may be a stock that we recommend in the future. Right now, it's just interesting that you've been talking about it and it popped up bullish in the Chaikin Power Gauge rating.
I want to talk a little bit more about some of the insights you shared in your latest Market Insights report, and that's on the increase in spending. We're talking about these defense stocks because there is a more emphasis put on defense spending in the US, and that relates to government spending. And there's some interesting data that's showing up in your Market Insights to talk about, and that's just with how much money the US is spending right now and the national debt. Can you share some of that with insight with our viewers?
What I talked about was the bullish technical climate for the market, which is clearly broken out above its 200-day average. And the one concern I have, and the concern that I have relates to the weakness in the US dollar, particularly when bond yields are rising as they are right now. Normally, when bond yields are rising, the dollar is going up, and that's a healthy sign, and there's a good reason for it because people from overseas, if they can get better yields in the US, will buy our bonds and buy the dollar. What's happening now is that traders in the dollar, international and domestic, are concerned about budget deficits and some of the social unrest that's going on in this country because the dollar has always been a de facto currency for the world and world trade because of two factors. The rock solid rating for U.S. Government bonds, and the fact that the U.S. is based on the rule of law. That contracts are just sacred in America, and uh, there's now a question in the minds of international investors that our budget deficit is exploding, and that social unrest suggests that the rule of law in America is in question right now. Now, I think we'll get through all this. We always do. But until we see a budget resolution that's passed that makes sense, and until we see a calming down in social unrest, I think the weak dollar is a concern because ultimately a weak dollar can affect the stock market. Right now, they're going in different directions, but that's my one concern in terms of advising people to stay bullish the market. I think people should have some cash on the sidelines, not a lot, to take advantage of any volatility we see because of the weak dollar and some of the other uncertainties surrounding trade and tariffs.
Now, you can read more of Marc's cautionary view on the economy and the impact it could have on the market later this year by signing up for the Power Gauge report. Again, just scan the QR code or click the link that's in the description of this video to sign up for that report and read far more from Marc on your own and get all of the trending stock data from his Power Gauge system too. So Marc, my last question for you today is, knowing we could have some volatility ahead, do you think that this defense sector and the three names that you shared today will still have a strong summer no matter what happens with volatility in the market?
Everything is interrelated, as you know, Bridget. So I think you have to view them as a supercharged way to play the market. So if the market holds up well and we get a mild pullback over the next couple of weeks and then extend out to new highs, I do think that aerospace and defense stocks will be in the lead. And I always want to be in the strongest stocks in the strongest industry group because they'll do a lot better than the market. But the market is still the sort of the tide that all these boats float on. And I'm looking for a strong summer. So yes, love aerospace and defense as a way to outperform the market.
Wonderful. Well, thank you so much for the advice. As always, Marc, we really appreciate your time. And thank you for joining us today. Let us know what you think about these defense sector picks. Are any of them on your watch list or already in your portfolio for this summer? We'd love to hear from you in the comments. Thanks for watching, everyone. And as always, happy investing.